7 investments smarter than keeping your cash in the bank. Think your bank account is growing? Think again. While your money might be adding up in numbers, it's losing value in real terms every single day. Inflation is skyrocketing, and the interest you earn from your bank barely keeping up. So, what can you do with your money to actually protect it and make it work for you? Let's dive into 7 smarter investments than keeping cash in the bank. 1. God's money, gold, silver, and platinum. First on the list, precious metals. Gold, silver, and platinum. These are known as God's money because they've been used for centuries to store value. They're scarce, they have real utility, and unlike cash, they're immune to inflation. Here's the thing, while governments keep printing more money, you never really know when the paper you hold in your hand will lose its worth. Gold, however, is a different story. Gold's value has increased steadily for years. In the 1950s, you could buy an ounce for about $400. Today, that same ounce costs over $2,000. And it's expected to rise even more, some forecasts say $10,000 per ounce by 2032. So, if your money in the bank is sitting there losing value, gold is steadily increasing in value. And if you're not into buying physical gold, you can invest in gold ETFs, exchange-traded funds that let you invest in gold's price without having to store the metal yourself. 2. Industrial commodities. Next, let's talk about industrial commodities. These are raw materials like silver, copper, cobalt, and nickel that are essential in manufacturing, electronics, and technology. Unlike paper money, these have real, undeniable value because of their use in production. Take cobalt, for example. The demand for cobalt has skyrocketed due to its critical role in producing batteries for electric vehicles. From $20,000 per ton in 2012, it reached $40,000 per ton in 2022, a 100% increase in just 10 years. If you want exposure to these industrial commodities without buying and storing raw materials, you can invest in mining stocks, mutual funds, or even commodities through futures contracts. 3. Safe haven currencies. Let's shift gears, safe haven currencies. In times of economic and geopolitical uncertainty, the value of your money can fluctuate. But certain currencies, like the Swiss franc, tend to hold their value better than others. Switzerland is known for its stable economy and strong political system. When markets get shaky, the Swiss franc tends to appreciate. It happened during the 2008 financial crisis, and again during the Russia-Ukraine conflict. In early 2023, one Swiss franc was worth over $1, meaning those holding francs saw their wealth grow during a global crisis. You can get exposure to safe haven currencies through currency ETFs or forex trading. You don't need a Swiss bank account to benefit from currency strength. 4. Sovereign guarantee. Next, we have sovereign guarantees. Government-backed investments like Treasury bills and bonds. These are considered low risk because they're backed by the full faith and credit of a government. Government bonds and Treasury bills offer returns that are generally better than keeping cash in a bank account. They're backed by the strength of the country, which makes them one of the safest investments available. Small investors can buy government securities directly from portals like Treasury Direct in the US or through online brokers in other countries. 5. Value stocks and mutual funds. Now, let's talk about value stocks. These are shares in companies that have solid, proven performance and stable growth, like in the industrial or utility sectors. Unlike growth stocks, value stocks tend to be less risky and provide steady returns over time. Investing in value stocks or mutual funds that focus on dividend-paying stocks can provide stable income and appreciation. For example, Vanguard's High Dividend Yield Index Fund offers a solid return with a reliable dividend history. These funds are a great option for smaller investors who don't have the time or expertise to pick individual stocks but still want to grow their money. 6. Land and real estate. Land and real estate, these have always been solid investments. Land is a scarce, non-depreciable asset that's always in demand for agriculture, housing, and commercial use. It's one of the few assets that doesn't lose value over time. Real estate prices have consistently risen, even through market crashes. Between 1992 and 2020, housing prices tripled. And it's not just residential properties, commercial properties, like office spaces and shopping centers, are valuable too. If you think real estate investing is out of your reach, think again. You can invest in REITs, real estate investment trusts, that pool money to invest in commercial real estate. This allows you to get exposure to real estate without buying properties directly. 7. Collectibles. Finally, collectibles. Items like vintage cars, rare artwork, and luxury watches are often overlooked as investments, but they can appreciate in value over time, sometimes exponentially. A rare 1955 Mercedes-Benz sold for $135 million in 2022, and a painting by Da Vinci fetched $450 million in 2017. These are high-stakes investments, but even smaller collectors can get involved through online platforms like Whatnot, or by investing in fractional ownership of rare items. Conclusion. So, there you have it, 7 smarter investments that can help you protect and grow your wealth. While keeping cash in the bank may seem safe, it's not keeping up with inflation. These alternatives are better options to help you build long-term wealth. Have you considered any of these investments? Let me know in the comments below. And don't forget to subscribe for more tips on growing your wealth and achieving financial freedom.